What is going on, everybody? It's Stas here. Welcome back to another video. So the stock market, oh my goodness, guys, it was a rough day out there. We had the S&P down 2%. The NASDAQ 100 went down almost 3%. We had the Russell down 2.2%, and we had the Dow down 1.6%. So today, we're going to break down some stocks, some charts, my thoughts on the markets, plus more. So sit back, relax, hit the like button, check out my Patreon down below, and let's get right into the video. So we talked a little bit about this earlier, if you guys checked out my video from earlier today, but since then, we did have some more price action, so let's break down what happened after 1 p.m., which is when I uploaded that previous video here on the East Coast. You guys can see we pretty much consolidated a bit after 1 p.m. The majority of the sell-off came from 9:30 a.m. in the morning, right at the opening bell, to about, let's say, literally 1 p.m. when I uploaded that video. And after that, 1 p.m., we got a double bottom here on SPY at about 433, and then we saw a bit of a pump to about 436, a bit of a relief rally there, which was close to a 1% relief rally, and then we saw another dump into the market close. We got a clear-cut head and shoulder here between 2 p.m. and 3 p.m., or actually no, between 2 p.m. and 4 p.m. on the East Coast, and we closed pretty much right where we double bottom before that head and shoulder, and now we're just consolidating after market hours. We're trading at about 430, 450, a little bit higher from where we closed, and we have these one-off manipulation candles. I have no idea what the heck went on here when SPY jumped out of nowhere to 444, then right back down to 434, and that's kind of where we're trading right now. Big sell-off in the morning, followed by, a bit of consolidation, and now we're pretty much consolidating after market hours as well. So going back to the 4-hour chart, in the very short term here, one thing that, well, there's many things, but the most important thing that I'm keeping my eyes out on are the low points from last week, right around 431, 430, 428. If we end up taking those points out this week, next week, I don't know. It could happen whenever. We don't know when it's going to happen or if it's going to happen. But if we take out those levels and we start going mid 420s, low 420s, we're probably going to go and test the low point from the middle of July. And if that were to break, we're probably going to go to test the low point from the end of June at about 413, followed by maybe 403, 400. If things got very ugly, which if I were to guess and throw a random blind guess out there, I don't think we're going to go down to 400. I mean, I'd be surprised if we did, to be honest. That is another drop, or rather another 6-7% from here. Sure, we could drop that low, but I'm leaning more towards the possibility, there is a decent possibility we take the lows out from last week and we go maybe between 415 and 420 before we start seeing maybe a relief rally or maybe a full-on rip back up towards all-time highs. And we all know why this is happening. I mean, there's a lot going on with inflation, the Fed, a lot of tension, uncertainty, which the market hates uncertainty. But on top of that, we have the 10-year Treasury going like this. Look at my finger right now. Boom, straight up. I mean, in the beginning of September, the 10-year Treasury was yielding about 1.3%, and now at the end of September, it hit a 3-month high of over 1.55%. And that is that's devastating these tech stocks, at least in the short term. And I'm still sticking to what I said earlier. I don't think these tech stocks are going to be down for long. I mean, what would you rather buy? A 5, 10, 15% dip in some of the big blue chip tech stocks, or a 1.55% 10-year Treasury bond with the government? I mean, it's a no-brainer, at least for people that are at 20, 30, 40, maybe 50, maybe even 60 years old, depending on when you're planning on retiring or whether or not you want to play it very safe. Sure, if you're 80 years old, 70, which I don't know if anyone out there in that age bracket is watching my videos right now, sure, if you're that age, maybe it might be better to just hold bonds or whatever. And one thing worth mentioning is, and I say this all the time, bonds are pretty much worthless. You're getting 1.55%, which on paper looks good. Okay, it's better than leaving it in the bank, but when inflation's ripping up 4, 5, 6%, maybe even higher, who the heck knows what inflation really is at this point, it's worthless because you're still losing money. The idea is you want to make more in terms of your returns than what inflation is, or well, what's the right way to say it? You know what I mean, right? You want to make more than what inflation is per year. You want to beat inflation, so your money is growing, and it's not being eaten away by inflation. So SPY, I'm personally keeping an eye on those levels. 430, 428, 420, 415. That is where I'm looking right now. And for QQQ, remember, SPY didn't take the low out from last week. QQQ did, though. It got ugly because these stocks, the tech-oriented, get hit the most when the bond yields go up, because that's just the nature of it. I've mentioned it many times before, and I am going to make a video on this. I'm not sure when I'm going to release it, but probably at some point this week. So you guys can see QQQ took the lows out from last week. We hit what was the low point from today? 357, I believe. Or no, not that low. 359. That was the bottom throughout the day. We held that as support many times, as you guys can see here. And at this point, yes, we took the lows out. Now we're at another big low. Big support level, shall I say, right around the middle point from the middle point of August at about 358, 360. If this were to break, expect another leg down. Probably to about 350, 351, which would put us right by the low from the middle of July during that little July sell-off we had when QQQ went from 365 to about 350. So if we see a leg down, expect it to go to 350, maybe 355, and from that point, a relief rally will probably occur because, like I always say, the markets, guys, they have a general direction. Yes, they move up for certain periods of time and they move down, but within those directions, we have ups and downs, little mini ups and downs, mini pullbacks, mini rallies, mini pullbacks, mini rallies. So just because the direction overall right now is down the past month doesn't mean it's going to be straight down. There's going to be up days, down days, and us as traders, we got to hop in and make money, right? Using the strategies, the technicals and so forth, and of course long-term investors. I'm one of those as well. I happen to be both a trader and a long-term investor. This is a good time to pick up some stocks, right? Not necessarily go all in on stocks. I'm not telling you guys what to do, but nibbling a little bit, I think it's a pretty good idea. So let me know your thoughts. Drop me a comment down below. Make sure to hit the like button if you guys are finding value in this video, as always, or any of my videos for that matter. Make sure to hit the like button and subscribe. It really, really helps me out, and I do appreciate all of you guys out there taking your precious time out of your day to watch my video. So let's power through some stocks. Micron reported earnings today, and I didn't see what they reported, but I did see the stock was tanking after hours, and it still is. It closed at $73. Now it's trading a little bit under $70 per share. So let's see what they did. The stock's down about 4 or 5. Actually, no, it's down about 5-6%, which is not good. You guys know chip stocks have been under fire, and Micron, being a memory oriented stock, memory chip stock. So these have been rough. I mean, I can't even tell you enough how rough these been as of late. But if you're looking for an opportunity, potentially, Micron, Intel, these are really beaten down. I mean, Micron just did earnings of, let's see here, adjusted EPS of 242 versus 233 estimated. They did sales of $8.27 billion versus $8.22 billion estimated. So they did a double beat there, and they see, oh my God, that's rough. That is why they're tanking. No kidding. It makes sense now. Their guidance is way low. Q1 adjusted EPS, the guidance is between $2 and $2.20 versus the $2.61 estimated. That's a bad miss right there. And their sales guidance is way lower, $7.45 to $7.85 billion versus $8.63 billion estimated. So, yeah, lower guidance, a lot lower than expected. This stock could go lower in the short term, no doubt about it. But again, what did I just say? If you're looking for a longer term investment, not necessarily saying that this is a longer term investment at these prices, but in general, this is when you'd want to buy. When there's weakness, overall estimates aren't that great. And if you're willing to hold through a little bit of pain, if you guys see the longer term vision, and not only Micron, but we're talking stocks in general, this is when you'd want to buy. When a stock is down, in Micron's case, 25%. It's in a bear market, and it's actually down even more than that after hours. So it's down about 30% from the peak. So, yeah, I mean, Micron, it's worth watching. Here on this 3-year chart, you guys can see, I'd say a buy range would be anywhere from, in terms of technicals purely here, anywhere from 60 to 65, I'd say, which we're getting pretty dang close to that. So I'm going to be watching Micron from here. EA had a pretty good day. I'm not sure how it did, considering the markets got clobbered. But hey, EA, it did well. It went up about 1.3%. Now we're testing that 50 moving average here on the 4-hour chart, and it looks like we're getting a bit of a V-shaped recovery here on EA, and we're peaking above. Actually, it's up another $1 after hours, so I'm not sure what's going on EA right now, but hey, I'll take it. In the sea of red that we're seeing, I'll take it, guys. Maybe, what is this here? EA announced return of Level Next featuring EA Sports Madden. I'm not sure what that is, to be honest. But overall, we're moving up. And I think there could be more upside here in the meantime. From the mid-130s, I think it could go 140, right by that 180 SMA on this 4-hour chart. If 140 were to break, we're probably going mid-high 140s again. So keep your eyes out on EA. Tyson Foods is another one. TSN, this one looks pretty good. We got an ascending triangle forming here on the 4-hour chart. Clear resistance at about 82, but we've been uptrending, making higher lows since months ago, really, since the beginning of 2021, and we've been digging ourselves deeper and deeper into the triangle, and with today's move, this also went up. It went up 1.2%. We're breaking above both moving averages. Looks like we're breaking out, and I think this could fill the gap. Maybe not this week, next week. I don't know when it's going to happen or even if it's going to happen, but I think there's upside towards, let's put it at 80, 82, maybe even higher than that. You know, if we break out of that 82.45 level from the middle of August, that is where we might see the leg up, and that is where the ascending triangle could play out. So keep your eyes on Tyson Foods. FedEx is another one that I'm still watching, guys. This one's clobbered. I mean, This went down another 2% today, and even last week after they reported earnings, it just kept going down and down and down. I mean, when is the last freaking time FedEx has had multiple green days in a row? We've had 1 or 2 or 3, but when's the last time we had a stretch of a nice week of green? It's been months. I mean, this was a $320 stock back in May. Now it's $220. The stock is down 30%. Just think about that, 30%. But we have rising costs across these different business models, from FedEx to UPS. Well, they're pretty much the same business model. They're different companies. But with all this inflation, shipping, this, that, the third, there's rising costs, not only there, but pretty much everywhere in this economy at this point in time. Some more than others, some industries, sectors more than others. But it's getting hit hard. And at some point, you got to ask yourself, when is this bleeding going to stop? Because right now, FedEx is at a year low. Wow. It took the low out at 240 after they reported earnings. Now it's at 221. I mean, this one's at a year low. Let's look at that 3-year chart. We actually haven't been at these levels since about a year and a month ago, August 2020, which isn't that crazy in the grand scheme of things. But if we start getting down close to those COVID lows, the beginning of the crash, which probably won't happen because those are at about $90, $100. If we start getting there, that's a steal buy in my opinion. But again, it probably won't get there unless we see a market crash. But let's say we start piercing under 200. that would be a long-term opportunity in my opinion. Maybe I'll even do a video on that, going over the fundamentals, financials, and so forth. But in my opinion, that would be good. And from a technical perspective, check out this 180 moving average, right, at about 200, 210. Buyers might step in there. That's on this 3-year chart. And if I pop up the 20-year chart, you guys can see it's clearly pulling back. Obviously, we've been saying that. And it's right by the 50 moving average on this 20-year chart. So maybe buyers step in here. But if we break 200, like I said, 175, 180, 150 on the low end, I think that is where FedEx could be headed. And get ready, because that could be a buying opportunity. As always, you must do your own research, though, so keep that in mind. PayPal, PYPL, there's a nice wedge forming on this one on the 4-hour chart. Look at this. Higher lows have been made since the beginning of March, but we've also been making, you guessed it, lower highs, and now we're seeing it hit a lower low in the downtrend. At least it's been downtrending since the end of July. We're also under the moving averages. We're also seeing a death cross. So I just want to see, very simply, if PayPal sees some sort of relief rally here, maybe from 260, maybe to about 270, 275. And of course, if it starts breaking out of the moving averages and the top of this wedge, that could be an overall breakout, but I don't think that's going to happen unless we see the overall markets start to recover, which who the heck knows if that's going to happen. And like I've said before, if we somehow see that 10-year completely collapse, which could happen, we've seen it happen before, then we can see the markets rip back up. It's just tough. I mean, there's a lot going on. We got the 10-year going up. CPI numbers are coming out, which will probably fluctuate the 10-year. We have more Fed meetings. Jerome Powell spoke today. He's speaking tomorrow. There's just a lot going on, guys. The markets hate uncertainty, and we don't know for sure. We don't know for sure if we're going to rip up or dump or go up 10%, down 20%. But what we do know for sure is, in the meantime, at least in my opinion, we're going to have some volatility. We're going to see the VIX up, which, mind you, the VIX was up 24% today. We're going to see that. I think we're going to continue seeing that. So watch out for PayPal, and we have two more before we wrap up this video. Airbnb, ABNB, this one looks pretty good. Still pretty bullish to me, guys. We're trading above both moving averages. We're seeing a golden cross, and I might as well just cover DoorDash at the same time because the technicals are damn near identical. I mean, look at this. Both are uptrending. They have been since May. Well, okay, DoorDash is under the 50 moving average. It had about a 5% red day today. It's moving towards that 180 moving average on this 4-hour chart. But either way, I think these dips on Dash and Airbnb could be bought up. Granted, if the markets collapse, they're going to probably go down a bit more. But if we see a bit of a recovery, relief rally in the short term, DoorDash, it probably will bounce at about 195, 200, maybe make a push back to 220 off these moving averages. And Airbnb, similar, very similar, right? We're holding on by a thread at the 50 moving average. Sure, if it collapses under that, maybe we go 155, 160. But from there, that is where we could end up seeing a buy the dip opportunity. Maybe buyer step in to push these stocks or this particular stock a bit higher. So overall, guys, that's pretty much it. A lot of crap's going on right now. We got to be careful. We got to be diligent. And this is why I always say, have some cash on the sidelines. You never want to be that guy or gal that's always fully invested. You're balls to the walls. You're not doing anything but buying. You want to have some dry powder, whether it's 10, 20, 30, 40, 50%, whatever floats your boat. And that is what you need for situations like this, right? And that's why I always say that in these videos. I don't want to sound like I'm preaching, though, but I do want to give it to you all the real way. Or I want to be real with you guys. You know what I mean, right? So we'll wrap it up there. If you all enjoyed the video, hit the like button, subscribe, drop a comment, check out my Patreon link down below if you want all my buys, sells, call outs, morning update videos, more access to me throughout the day. All of that's on Patreon link down below. Or you guys can go to StockSurfest.com/Patreon. That's StockSurfest.com/Patreon. Make sure to also get your $30 from M1 Finance. That's free. And your two stocks from Webull, also free. Both of those are linked right down below. And that's it. I'll catch you guys in the next video. Thanks for watching again. As always, keep crushing the markets. Stay safe out there. Peace out, guys.